Good evening, everyone, and thank you for joining us for our virtual session, Your Credit Report, Your Score, and More. My name is Barbara Agan, and I am the Director of Member Engagement and Education with ABCO Federal Credit Union. Oops, let's take a look at the agenda. So we're going to take a look at reading your credit report. We'll talk about how to resolve errors or disputes. We'll take a look at the credit score and just go over some score basics, the impact of behaviors on your score and some tips to improve your score, and then some Q&A. So what is a credit report? A credit report is basically, it's a history of information about you from the time you first obtained credit until today. There's a lot of information contained on the credit report. You've got your name, address, your social, date of birth, possible employment information. You also have all the information about your credit cards, mortgages, car loans, and student loans. One way to look at a credit report, it's as if you had a report card that started when you were in kindergarten and continued on through college, graduate school, work, and it was just that ongoing report. It's definitely a history of everything you've done since the beginning of time. The first time I saw my credit report was probably about 10 or 15 years ago. I was in an education session where people were talking about their credit score, and I really had never paid attention. And I was surprised to see so many credit cards that I had closed out that I no longer used were still on my credit report. And we're going to talk about that and how you handle that. So, credit report continued. Okay, the credit report may also include, if you have a current loan, the terms of your loan, how much you owe, and your payment history. It talks about anything bad, judgments, tax liens, property or bankruptcy filings, or inquiries about you. Also includes a list of companies or persons who recently requested a copy of the report. And we're going to go through my credit report. So, does anybody currently monitor their credit score is a question to ask. There are programs where you can do that. Probably LifeLock might be one that's well known or popular, but ABCO's Protection Plus Checking also offers information about your credit score and identity theft. There's also other products that are new I'll talk about towards the end, which are also available for members to learn more about their credit score and credit protection, et cetera. Also, if you don't have our Protection Plus and you don't have LifeLock and you don't have any, you can also become a free member of Experian. That's something you can do. But also you could use Credit Karma. Most people are familiar with that. But keep in mind that the score for Credit Karma tends to be a little higher than others because part of how they make their money is to sell you products and tools to help lower your score. So you kind of have to take their credit score with a grain of salt. So basically, the credit score is a 3-digit number that relates to how likely you are to repay a debt, and it's based on the information found on your credit report. So again, your credit score is a result of your payback behaviors. It also includes the capacity on your cards and any judgments or bankruptcies. The score is not affected by your name, address, or job history. And there are 3 national reporting bureaus. There's Equifax, Experian, and TransUnion. Each of these agencies produces a version of what's called a FICO score based on the data that's collected. You can actually use annualcreditreport.com to get any one of these reports for free in the course of a year. So often people will say if every 3 months you could do first time you do Equifax, the second time you do Experian, the third time you do TransUnion, and that would give you a means to just make sure everything's on the up and up and not have to pay for it. I happen to have a free Experian account, so so when I went on annualreport.com, that's what we're going to be looking at. So when you take a look at this, and each slide I'm showing you is about half of the first page. So the first page shows at a glance that there are 32 accounts, no public records, and 4 hard inquiries. My name is up there, the date that it was generated. I did this back in June preparing for this seminar. It shows that I have 3 addresses, 3 names, 5 addresses, 2 social security numbers, 4 employers, and 7 other records. So for my name, that makes sense because sometimes I use my middle initial, sometimes I don't, and I guess on some account somewhere I use my full middle name. So that's why you see that information. Now for the addresses, I just kind of blurred out, some of the personal information, but anything I circled in red was something that I considered an error on my credit report. So, the second one, Apartment Road in Somerset, that just doesn't make any sense. What I found out was the 2 Kendall Park addresses, those belong to my ex-husband. So that needed to go. And then the third one, Somerset, that just had an odd name. So what I had gone through, when I'd gone through my credit report, I just kind of highlighted anything that might need to be changed, and then I was able to dispute and correct that information. Oops. So for the Social Security, the one I circled was there was like a typo. So somebody must have, whether they inquired on me or maybe when a store credit card, they must have entered an incorrect social and it ended up on my credit report. I don't necessarily think it's fraudulent, but, again, needed to get that taken care of just to be on the safe side. So year of birth, 1964 is correct. The interesting thing about the phone numbers was none of these belong to me. The first number I don't even recognize. I have no idea whose it is. And the cell phone number, one is an incorrect transposition and the other one belongs to a former friend. So those had to go. Spouse or co-applicant. So there was Richard, and that's my ex-husband, so I put an X through him. And then as far as my employers, so I have the New Jersey Credit Union League. I used to work for them prior to coming to ABCO. I'm listed twice just as myself because I did spend several years self-employed. I also did work for Summit Bank. It was interesting, I asked, I have a contact at Experian, why didn't ABCO show up? And they said, it's not an all-inclusive, so there are just certain pieces of data that Experian goes out to when they look for information. And perhaps wherever ABCO reported me as being an employee just didn't happen to be on their records. And that would be something I could certainly add if I felt I needed to. The notices that the address has pertained to a business and it's a trade contractor, that's my ex. And when I was speaking with Experian, it seems, I think he's still using my address for his business address. So I wasn't able to remove those, but that's fine. His stuff is still separate. So the credit report did recognize I have a credit card with ABCO, so it shows it was opened in June at the time, or no, it was opened in December. As of June, it had a balance of $538, recent payments, credit limit, etc. So now here it's showing the payment history, and I've only had it, for about 6 months or so. So the green dots mean that I've never been late, and it shows just the payment history. So it shows that I consistently make payments on the card. I don't necessarily pay it off all the time, but it is consistent. And then on the bottom is the contact information. So that's our address for the lending center and the phone number. Where that can be important is several months ago when I was looking at something and there was a credit card listed that I didn't recognize. and it turned out it was my Sears MasterCard that I really don't use, but it was listed under a different name, a different holding company. So I had to call the number to say, what is this card? And then once I spoke to somebody I knew. So this is an American Express Discover card. I haven't had a balance on this in a long time, but this is a good example to show where you see in the orange, I gotta look over here. So it shows there were times when I was 30 days past due. So again, this card was opened back in 2008. I don't even think I have the card, but I guess it's still open. But you know, it does show when I was late. Public records, I'm happy to say I don't have any. But pretty much the hard inquiries, that would be when companies really did pull my credit. So for example, my son, I'm a co-signer on his car loan, so the financing dealer showed up there. ABCO, when the credit card did hard inquiry, and then the two of them were when I was refinancing my house. Once was just this past, maybe January, February, and then I also did a mortgage refinance about a year ago. So it would have the name of the company that made the inquiry, their address, their phone number, etc. Soft inquiries are anything from somebody kind of pulling your credit because they want to make you an offer or send you like an offer in the mail. Soft inquiries would be if you pulled up your credit and took a look at it, and they don't really affect your score. So I have done an Equifax inquiry and Experian. Credit Karma and Experian, I guess because I have accounts, they technically pull the credit all the time. It's not, and I'll get an email that says, would you like to view your score? Your credit score is either changed or whatever the case might be. These two went on for a while. So on and on and on and on. Oops, did I go the wrong way? Oh, I sure did. And there's the information here about medical information, talking about how they cannot disclose medical information. But if you had medical payments not paid, they might only display as medical payment data. And then the public records would include items from court that Experian may have obtained from a third-party vendor. There is Experian contact information. Anybody have any questions so far, or is everybody good? All right, I see no questions in the chat, so I will continue. Okay, there's the Fair Credit Reporting Act. That's just information, and this is just a snapshot. It went on for a long time, just talking about what your rights are under that act. And here's a picture of Experian's Dispute Online Center. So for me, if I was doing it, I would sign in and then check an existing dispute. And I actually went to do that. So all of my address changes were made, but there was a credit card that I think I was still listed as joint with my ex. So that's still being looked into. But for you, if you don't have an Experian account, you would click on Start a New Dispute, and then it would ask you for your information, your name, address, your social, the information they need to be able to pull your report. And I'm assuming that they're going to call you to also verify that it's you. I don't believe they would ever do this strictly on the phone. Not the way the world is today. So I also was able to do a pull from Equifax, which I also have an account with. But really, Equifax, they gave different information, but a little bit limited. So Equifax told me my score. It told me recently I have gone up 2 points. Total lines of credit, it shows 9, and credit utilization 3%. Sometimes people will ask and say, well, why is one score different than the other? And because if you pull all three or you have a means to see all three, you'll see they vary. And that's because not all financial institutions report to all three credit bureaus. Some only report to one, some only report to two. So, it's hard to say. And there's a lot of different models for those credit scores. So they can vary a little bit. What I like for the summary that the Equifax report shows is the length of let me try that again. What I like about the Equifax report is it shows the length of credit history, so 31 years and 10 months, and the oldest account was a Bank of America credit card. And that was, I used to work for Bank of America. So one of the things when we talk about tips and your credit score is your credit history. So one piece of advice is never close out your first card. You can cut it up, you can never use it, but don't close it out because then you lose some history. So the other piece of information, so these are the accounts that Equifax showed, and it would show the type of account, open accounts with a balance, available balance, credit limit, and monthly payment amounts. So that's the Equifax data. So FICO, we've said that word a little bit. Originally, Fair Isaac Corporation is a data analytic company based in San Jose, California, and they focus on credit scoring services. So you see here with the circle, you can have anywhere from 300 credit, which is considered very poor, to exceptional, 800 to 850. Obviously, it's important. The better the credit score, the better you will have, it affects the rates that are offered to you, payment terms, things like that. So it's always good to strive to have a good score. So what makes up your credit score? Well, you have the types of credit. So, 10% if you have, if you have a credit card, if you have an auto loan, a mortgage, the more you have, the greater that piece of pie will be. Your new accounts and inquiries are a small percentage of that pie as well. The length of credit history is 15%. Okay, the amount owed, the amount you have to pay back, is 30%, and your payment history makes up 35%. So knowing that can kind of help you, because if you're in a position where you'd like to increase your score, you know the areas to focus on. So why do you need good credit? Well, it improves the image in the eyes of the lender so that you can get a loan at a better percentage rate and increase your buying power. A lot of jobs these days look at your credit report and their credit score because they believe it shows character. Especially your finance companies and police departments, they want to make sure, like if you're, working with money, working with data, sensitive information, that you're responsible. And your insurance rates can also be impacted based on what your score is, and you may all be familiar with that commercial where, the guy's saying, saying that your insurance is affected by your credit score, and the driver's like, he goes, isn't that illegal? He's like, no, it turns out it's just immoral. So it's a shame, but that's how people look at you these days, look at all of us. And the bottom line is it saves you money. So I'd like to give you an example of that. So impact to you now and later. We're looking at a used auto for $20,000. The person on the left has A credit, their credit score is 720. Person on the right has D credit, their score is somewhere between 525 and 624. So they're both 60-month terms, 5 years. The person on the left gets a 5.5% interest rate, whereas the person on the right gets a 12% interest rate. You can see the monthly payments are different, and then the A credit interest paid totals $2,921, The interest paid to the D credit, $6,693. That's a huge difference. And the reason all financial institutions will do that is because they set aside that extra money in case you default on the loan, because that's usually somebody with D credit. The reason they have D credit is because they don't pay back regularly and they tend to default. Doesn't mean if you're D credit you will, but that's why it works that way. On a smaller scale, this would be looking at a credit card. Again, the same A versus D credit. And of course, the credit card is revolving. So the interest rate for the A credit would be 11.9%, which is significantly lower than the D credit at 25.99%. Yeah. So the balance on the credit card is $2,000. They're both paying $100 a month, but the A credit will have theirs. It takes 24 months to pay off with $241 in interest versus 27 months to pay off and $652 in interest. So definitely pays to improve the credit score. So let's say, or look at steps for improving your credit score. So again, like I said, all of the, when I talked about the credit history, 31 years, never close out a bunch of zero accounts as long as they're not hurting you, and especially not your first one. The FICO score does not take into account if you have too many credit accounts. They basically look at credit utilization, which is, and I have a slide on that to help explain that. Credit utilization is basically how much available credit do you have and how much of it have you used. And they like to see the score 30% or below. So one tip that could be done, sometimes parents will do this for their children, their adult children, is add them to their credit card, which would allow them to have the benefit of your score and your behaviors as long as they're positive. That alone would not work. Like if you had, let's say you had a 21-year-old son, for example, and you added him to your card. He doesn't get a card, but he's an authorized signer. So, he could have a card if you gave it to him. But basically, you're buying, you're paying back, and he's getting the benefits of developing a credit score. If he went to go for a loan and that was the only credit he had, chances are he would not get the loan because he really hasn't established his own ability to pay it back. He would need to do something. And usually I recommend for new drivers, 18 or older, is to figure out where they get gas and start off with a gas card. Usually the limit's low, and then they can go ahead and use it, pay it off. And you can always tell once you start building credit, because then they'll start getting offers in the mail. So my son has a car loan, the one that I co-signed for him, and it probably took about 3 to 6 months before he had a score somewhere in the low 600s, but I haven't checked his score recently, but his payments have been on time and he is starting to get credit card offers in the mail. So that's a good sign. That's what you want to see. So other good things to do, good behaviors, pay your bills on time. Keep your credit utilization ratio less than 30%, and I'll explain that soon. Don't close out all old accounts. Never close out your first account, and don't open a flurry of new accounts. So, you can manage your credit and you can open a new credit card, but if you're one of those, like every store you go into and they're like, oh, would you like our credit card for a discount? You want to minimize that because opening too many cards at once could be a red flag and could hurt your score. So here's an example of credit utilization. So card 1 has a zero balance, $5,000 limit. Card 2, you can see, has a $10,000 limit, but the balance is $8,000. So that's 80% credit utilization. Card 3 is using 1 out of 7,000, and that's 14%. So overall, the credit utilization is 41%. So I'll tell you, for me personally, that Sears MasterCard that I mentioned earlier, I had never, I forget I had maybe a $5,000 or $10,000 limit, and I hadn't used it in a long time. So they reduced my maximum limit down to like 2,000, and that kind of threw off my credit utilization. My score dropped about 13 points for about 2 weeks, and then after that, it started climbing up again. I thank the good Lord that that happened after I did my mortgage refi because I was able to lock in at a good rate. That happened after. I was like, whew, timing is everything. So in this example, if I were to close out card number 1, which has no balance, that would actually increase my ratio to 52%, which is not good. That's kind of what happened to me in my scenario. If I really wanted to bring this down below 30, what I would need to do is pay down card number 2. I would have to, try as soon as I could get it down by $2,500. That would bring my credit utilization down to 30%. Other facts about the score: the soft pulls have no effect on your score. Again, in addition to, doing your own credit checks or companies looking to make you an offer, employers will pull your credit, so will the landlords, etc. Oops, what did I do? The hard pulls can affect your score. So when you do apply for a loan or a credit card, that's a hard pull, but that's okay. I mean, that's expected. A debit card payment history is not a part of your credit score, nor is your checking account. Student loans, when not due, are not part of your score. When due, they become part of the score. If you're going for a mortgage or an automobile, credit bureaus understand that it's usually not a one-stop shop. You might shop around, so that's why they allow, within 14 days, they consider multiple inquiries as one hard inquiry. So it really doesn't affect your score all that much. And it takes about 6 months to generate a score, and I was able to see that with my son. So utilities, phone, gas, electric, cable are not part of your score, but will show up if it becomes a collection account. And obviously bankruptcy is the worst thing you can do for your score. And then there's a couple of different kinds of bankruptcy. And all negative information stays on your credit report for 7 years. Say the interest rate has no effect on your score, but again, your score could have the effect on your interest rate for sure, and loans. So one other thing I just want to say, which is another tip, you've probably all heard of Experian Boost, and I never really understood what that was. So let's just say you're a person who only has like 1 or 2 credit cards. You don't have a lot of history, and you're trying to build up your score. If you have, let me just go back. If you have your utilities, your phone, you've got a cable bill, electric, all of that, and if you have good payment history on your bills, that's what Boost does. It takes into consideration your paying habits of these other things that normally are not part of the score. So that's why you can get a boost real fast. I never understood that. So anybody have any questions at this point? If you do, please type them in the chat. So I want to thank all of you who participated in this meeting, and I hope to see you at a future session. We are holding a home buyer seminar on September 8th, and that information will be up on our website very soon.